So people are looking at what can I do now to maximize the funds that I'm saving for a later date and actually try to make some money on their funds instead of letting the bank be the only ones making the money.
Compounding is what Einstein called the eighth wonder in the world. And what it is you putting your money in and then letting time and the appreciation happen. And then you start actually making money on top of the money that you actually put in. So your money starts making money.
Hey, what's going on, guys? Hope everyone is doing well today. Listen, we have been paying attention to the comments and we know what goals you all are looking to accomplish this year in 2025. And we have two special guests that's been here before and you guys begged us to bring them back. Well, listen, they are back, but I need you to grab your notepad so you don't miss any of this information. They're going to be talking about banking and things of that sort, so you guys know exactly what's going on, and so you all can prepare, so you guys can hit more of your financial goals. Without any further ado, I want to go ahead and bring in the Wealth Twins, Nadia and Nicole. How are you, ladies, today?
Hey,
Fine.
Kelvin.
Hi,
How are
Kelly.
you?
How's everything?
Doing great, doing great. I almost forgot you guys, of course, sound the same. So,
Well, you
all
can tell
right,
us apart now because I got some braces for the
I
next
saw
for the
You
that.
got
year.
I
mouth
saw that.
jewelry.
My mouth
There you
jewelry.
go. There you go. Look, I'm at the host. I'm at the host of money then, because you over here getting money is what you're doing. Okay. But, but listen, I most definitely understand for sure. Thanks again, ladies, too, for carving out your schedules. I know you guys have families, businesses, things of that sort to run, and of course, your own YouTube channel that is blowing up. And we had to get some information that you guys have been talking about. So thanks again for carving out your schedule for today.
Oh,
No,
no
thanks for
problem. Thank you
inviting
for
us. We
having
love
us.
it here.
Yeah.
Absolutely. Awesome. Awesome. All right. So let's go into, I got quite a few questions. I know we don't have a lot of your time today, but I do want to go ahead and ask some of these questions because, again, this is information I truly believe that people need to know, especially right now. You talked about reasons that people are leaving banks for various investment accounts or just leaving banks in general just to really grow their money faster in 2025. What are some of those banks, and also too, what are some of those reasons why people are doing that?
All right. Well,
Well,
I'll jump in first. If you look at it, I think people are wising up to the situation right now that a lot of the big banks are taking advantage of the average saver or the person who's using their bank accounts, right? So,
Yep.
if, say you go and you want to buy a house, the interest rate you're going to get on that mortgage right now might be 6, 7%, right?
Right.
But the money they're using a lot is coming from the accounts that they're holding, like the checking accounts, savings accounts, and stuff like that. If you're looking at your money being saved in these big banks, they're paying you 0.01% on your
Mm,
money there. So they're taking your money that you have sitting in the bank and then they're loaning that money out to other people at a much higher interest rates. Now, the interest rates have jumped up, but these banks are not reflecting that in the interest rates that they're paying the people who have their savings accounts, right? And on
got
top of that, they're charging you fees if you don't hit the minimum required balance in those savings accounts. And
yeah.
they're not giving you as much benefits. So people are looking at what can I do now to maximize the funds that I'm saving for a later date and actually try to make some money on their funds instead of letting the bank be the only ones making the money.
Exactly. Instead of letting the banks be the only ones making money on that money. That's
Hmm.
huge, especially right now, because if you're looking for a personal loan option that looks at more than your credit score and you're looking for something that has a soft pull to see the terms and the monthly payments and such, go ahead and scan this QR code or click the link in the description below to learn more. Now back to the video. I know, especially with the way that stocks have been up and down, and how, I mean, let's be honest, sometimes, the administration plays a role based on, things that are said, decisions that are made. And so, okay, now we got that. What are some other reasons that you're seeing as well, too, based on like what people are making decisions on?
why people are moving to bank, I think the customer is just becoming more savvy. That's really
Yeah.
what it is. So not only are they knowing they're being taken advantage of, they also know they have choices. And
Yeah.
there's more and more banks that are coming out with advertisements and more people like us, financial, I don't want to call us influencers, or people that are spreading the word of financial literacy, helping to have people understand that they do have more choices and that they don't have to settle. And I
That's
think
right.
that people are taking more ownership in the choices that they're making when it comes to where their money should go. I think
Mhm.
that's really what's changing it. So it's becoming a customer that's actually forcing these banks and these other institutions that can offer a bank like thing to actually start offering it to customers.
Yeah, it's a
Wow.
competitive space. Like if you're going to
Yeah.
compete for customers, what products can you put out there that bring more customers to you? And one of those incentives they do is paying higher interest rates than a traditional bank account would.
Wow. Wow. And then let me ask you guys this, because obviously people, we got to have banks, and we have to make sure we're keeping eyes on our money and making sure that our money is growing in the right places based on a lot of the content that you all create. Is there like an age that's too young, if any, where people can actually start doing these things right away? Or are we talking like just for people that's 30 plus, 40 plus and beyond?
So with that, the only requirement of how old you have to be, I think the younger you can start, the better, because then you have
Mm,
time on your side. And
yeah.
time is one of the greatest assets we have in terms of something called compounding. Compounding is what Einstein called the eighth wonder in the world. And what
Mm,
it is you putting your money in and then letting time and the appreciation happen. And then you start actually making money on top of the money that you actually put in. So your money starts making money. And the longer
right.
you have for your money to be into an account that actually compounds, the better for you. Now,
Yeah.
in terms of age, yes, at one point a child needs their guardian to open up these accounts for them and to help put money in. But there are some accounts now, like Fidelity has like a children account. Nadia, if you know the name of that specific account, it's an investing account that a child can have at the age of 13 when they can start making their own investment decisions. Now, in terms of like a special account like a Roth IRA, yes, you can open that up if you're able to. Like, you have to have earned income. It's not an age requirement on there. So whatever
Mm,
age you start getting earned income, because there's some kids that are baby models, for example, or you might be a babysitter, you can actually earn income. And when you're earning income, you can actually open up an account like that. So this is not the things that we talk about in terms of the accounts that can help you not only put your money in but also help grow it. There's really no age requirement
yeah.
if you have certain things in place. Someone can open it up for you and invest on your behalf, or there are accounts where if you earning the income, you can actually start investing at a very young age.
Yeah, and if you're a parent who's worried about a child
Mm,
who may not be as responsible with their money, you have the power over those accounts until that child is 18, depending on what state you're in, right? So you can open up a joint account with your child when it comes to savings accounts, or a custodial account when it comes to savings accounts. You also can open up custodial accounts for that child when it comes to investing.
Real quick, be sure to download our free ebook today. All you got to do is scan this QR code right here or click the link in the description below. Now back to the video.
Now, the teen account that Nicole was talking about, I think it's called the teen account at Fidelity, but I don't know the exact name, but you can look it up. That gives the teen some ability to start practicing how to invest for themselves, right? But the parent still has some control. You can monitor what's going on, you can see what's going on. But it gives more power to that teen. So the earlier they have that ability to start managing their own money, the more they're going to have that experience going into adulthood and not waiting until their adulthood and they have to start doing it. I think it's better to start them earlier rather than later, but they have some guardrails. But you are also able to monitor their progress or what they're doing, and you can control it how you want. But I think putting the power in the child's hand or having them be included in the activity is good at an early age. And if you haven't done it when you're younger, it's better now to start than not doing
Yeah.
it at all.
That,
Okay.
that's what I was going to get into. We talked about young is good, but no matter what
Yeah.
age you are,
Yeah.
starting is the best thing you can do.
Yep.
We talk to people who are in their 50s, 60s, 70s,
Started.
right? 80s actually,
Yeah.
who have not started to invest. But when they understand what the power
Mm,
is and what they can do and the options that they have, they actually start investing. So it does not matter. The young, you might have a particular age where you can't start without someone's help. But the older you get, the more important it is for you to start opening up these accounts and start figuring out how to grow your money.
absolutely. And you all have been talking about this for years now, And how did you guys get into this field, this industry of saying, you know what, this is information that people should know and they should know it now? How did you guys find yourself in that
I
position?
would say, like Nicole and I both have finance backgrounds, right? We both worked at Goldman Sachs. We both were in management
Yeah.
consulting at different banks. And Nicole has her MBA in financial instruments.
Mm,
But when we had basic financial conversations with people, we realized there was so much of a gap, like not just based on our education, just based on foundational things that we thought most people should know, but a lot of people didn't know. I had a cafe at one point, and I would speak to my employees and just speaking to them about how they should be managing their paycheck. Why shouldn't they be going to a check cashing place? Why they should be opening up a bank account or a checking account so they can get the direct deposit, not pay someone a percentage of their paycheck. Like these are basic foundational things that we
right.
thought that people should know this, because at the end of the day, a lot
Mhm.
of companies are cutting back on costs, and those costs come at the expense of their employees, right? They used to have pensions, but now they shifted that responsibility to the employee. You also have the government with this new bill that's
Mhm.
coming past, and I'm sorry, I'm not going to get too political, but this bill is going to put your
Yeah.
finances more in your responsibility because they're cutting a lot of government subsidized programs, right? So if you don't have the basic financial
Mm.
knowledge,
Yeah.
you're going to suffer going forward because
Yeah.
this is not going to be rolled back. Like they're not going to keep taking on more responsibility from the person. Once they see things are moving along, okay, we're going to keep shifting the onus to
Yeah.
you. But at the end of the day, no one's going to save you. So you have to take this into your own hands and make sure you know what you need to do.
You
Yeah.
know, Calvin, I think one of the reasons why we're also passionate is
Yeah.
because when Nadia and I were growing up, yeah, she told you we worked at Goldman Sachs and everything, but we did not grow up with a silver spoon.
Yep.
We grew up in government housing in New York
Mm.
City during the 80s. This is
Yep.
when Bed-Stuy wasn't the best place to be. It was
Oh, well,
Bed-Stuy
we
do or
weren't in
die.
Bed-Stuy. We weren't in Bed-Stuy. We were in
Yeah,
South
we were
Mid
in, yeah,
Queens.
we're from where 50 Cent grew up. Okay. So if you watch, what's that show? I
Got
don't
you.
want to get
Kane,
into this or
Kane or
excuse me.
whatever.
Canaan. That's where we grew up.
That's
Yeah.
South
Oh,
Jamaica,
yeah.
Queens,
That's a good show,
okay?
but
And
keep
it's not
going.
making much up there.
And the reason I'm passionate about it because I realized from a very young age is the access to information can be the difference between night and day. Okay. So the money lessons we learned when we were
Yeah.
growing up was about suffering. What happens when you don't know the education? What
Yeah.
happens with the family breaks up because the money conversations about we don't have enough money. We didn't do the right decisions. So if
That's
we
right.
can help prevent that, because Nadia and I learned the other way by being in those places of Goldman Sachs and seeing people who knew how to manage money, seeing people who actually were investing, seeing people who weren't getting taken advantage of by these cash advance places, the cash checking places. When you see that, you say, you know what? I know what it's like to have suffered. And if I can teach other parents to do it and other kids that
Yeah.
don't have to go through what we had to go through, then yes, it's on us to do. We have the access and
Mm.
information, so we have to give it out.
I agree.
Wow. Wow. I love it. And you know what? Listen, first off, New York in the building, Queens, stand up if y'all are in New York for sure. Let us know in the comment section for sure. But I love the transparency because, a lot of times people associate people that have money or wealth or things of that sort that people don't want to give that information. And that's what I like about both of you all is that once you learn something, and it's not just learning something, but many of the things you all talk about is based on things you either have taught people or things you've done on your own, or learn from your backgrounds and things of that sort. So we greatly appreciate that. Now, you also mentioned something about a Fidelity cash account. A lot of people may not know what that is. Okay, first off, what type of account is that? And you also mentioned that there were some reasons that people were leaving their banks to get this type of
Now,
account.
you
Why
want
is
to
that?
take that? Or you
Yeah,
want
I'll
me?
take it. So, Fidelity Cash Management Account, it's another type of brokerage account, but think about it this way. It's a
Yeah.
I don't want to call it a bank account, but it
Called
has
a
more power
hybrid.
than a bank account. So, like, think
Yeah.
of it a hybrid as a brokerage account and
Mm.
a bank account. You can move money into there. You don't have to invest it right away. So while your money is sitting there, your money can start getting interest, right? So you have two choices when you put it into a Fidelity Cash Management account. You can put it into their cash sweep account, which means that you have cash sitting there overnight. They will move it to their partner banks overnight, and then you will get paid interest on that. Now, it might be lower than the other account that they have, which is their money market fund. So whatever cash you have sitting there overnight will be moved into their money market fund, each one, right? If you have money sitting in the cash sweep account, that money's not being invested overnight. That's going to be put into other bank accounts, but you still have the FDIC insurance on that account. So if it's under 250,000, that money is insured. So if one of those partner banks go down overnight, you will get your money back if it's under 250,000. Now, what's good about this cash sweep account is that it gives you more flexibility because if you have your money in a regular bank account, you're only insured up to 250,000, like I said. So if you have more than that in that one particular bank account, that bank goes down, you're only guaranteed to get $250,000 back, right? With the cash
Wow.
sweep account, you can go up to 5 million. So they will put that money into different banks to try to take up that 250 in each of those banks so that you're not as exposed if you had over 250,000, right?
Mm.
Now, when it comes to their money market account, yes, it's getting invested overnight in a money market fund, which is relatively safe, but there's some risk associated with that, right? So
Okay.
they can't ensure that something went wrong there if you lost your money in the market. But it gives you more options and it pays a higher rate than a traditional bank account. This is more closely aligned with a high yield savings account, but
Mhm.
you have a brokerage component to it because you can take that money and instead of it just sitting there overnight, you can invest it. So it makes it a little easier. So now you have your money sitting in one place that you can either leave it and have interest growing on it, or
Yeah.
you can start picking investments
Yeah.
from it.
So what's also
Okay.
good
Mm.
about this account
Okay.
is that it makes, like Nadia said, it makes everything convenient. But it also, just like a bank account, it gives you a debit card. It also has no fees associated. So there's no minimum
Mm.
balance that you have to have in that type of Fidelity cash management account.
Exactly.
So the money market portion is, if you're looking at the scale of the most conservative investments up to the riskiest investment, I would consider like crypto is a very
Yeah.
risky investment, right? Whereas a money market, that's very close to one of the
Mm.
safest investments you can make. And the money market account that Fidelity
Mm.
has is SPAXX. That is the ticker symbol. And a ticker symbol is just a way to name
Okay.
an investment so that everyone knows this is the name for that particular investment. And it's different from what you would call it just in plain English when people are talking. And it's a government money market. So that means that they're investing in T bills, which is treasury bills. They're investing in short term, like bonds that are about to mature. So it's very, very safe securities. But you do have someone, a money manager, who's managing the money and picking which T bills to buy, picking which government securities to buy. So therefore, there's some risk, right? But you can take that money in and out as many times as you want. All right. So that's what makes it a very liquid account, a very convenient account, and very similar to what you can do in terms of a bank. Now, the difference between this and a bank account is that you can't deposit cash in this account. You have to write a check. Then you can use their app to actually take a picture of the check to put money in the account. Okay. So there's rules around it that it may not be as convenient. You can't walk in
Okay.
and put in cash. But the traditional things that you would probably use for a bank account, you can do with this account plus more. And like Nadia said, it's giving you higher interest rate on both.
I mean, and what's crazy is I've
Yeah.
never heard of this type of account. Now, would you all recommend this in addition to having a Roth IRA? Because I have some clients that they are about to max out, either a one or multiple, Roth IRAs. Is this something that, they
I
should
mean, if
consider
you,
they
I
should
mean, if you're
consider as
looking,
well
so
too?
a Roth IRA is a retirement investment account. So we're talking about investment account versus just
Yeah,
a cash account. Let's consider this is a placeholder, right?
got it.
I think as many more as you
Got it.
can get in terms of accounts, and you have choices. And yes, I can't recommend a particular product. I don't work for Fidelity,
Yeah.
but in terms of
Right.
like, is it beneficial? You should
Right.
look at it, but it's not the same as
Okay.
saying an either or for a Roth account. A Roth account is for a particular purpose,
Okay.
after tax retirement funding, right? And has a limit, but it gives you a lot of things to invest in. Totally different from this money market account. I would consider an account that people should consider on top of having a Roth IRA would be a taxable brokerage account. This is another investment account that you can
Mm.
invest in anything that you want. It's after tax, just like the Roth, but there's no limit. It's not only used for retirement. You can tap that the investments and the money you get from that investment anytime you want, but you will get taxed
Mm.
based on the money you make in that account. Okay, so there's no penalties, but there is tax portion you have to pay for if you make money in that account, and depending on how long you have kept that investment. So the longer you keep the investment before you sell it and made money off of it, the lower your taxes will be. But that would be something that I think more people
Wow.
really need to understand, how important that taxable brokerage account is. That's an investment account that gives you a lot of access to a lot of different investments, but it allows you to tap into a source of
Yeah.
money that you have saved and also grown, that you don't have to wait until you retire. And there's no limit to how much you can put in there.
Now,
Wow.
Nicole, correct me if I'm wrong, but the cash management account is attached
It
to the
is. So you
taxable
can take
brokerage
this. So
account. So
consider the
you put
cash
your money
management
in there.
account, like you said, cash management. It's for you to like, until you figure out what you want to buy. It's a way to place your money somewhere to get a little bit more interest. Then you can move that money into a Roth IRA. You can move that money into a taxable brokerage. Okay, so look at the cash management account as a placeholder where you can have some very conservative investments that'll pay you a little bit of money until you figure out what you want to buy. And then from there, Fidelity makes it pretty convenient for you to take that money out and put into another account that gives you more options.
Wow. Wow. Listen, amazing breakdown of all of this. Listen, in the comment section, let us know. This is why we had to bring the twins back so they can focus and talk to you all about wealth building. Okay. Most of our friends say, hey, they're always coming up with,
Mm.
with reasons for us to spend our money. So, but you need more friends that's going to help you, invest and, turn your money into wealth. I did want to bring up something that you talked about a little earlier. And you talked about, obviously, people are going to be affected by this big beautiful bill, and or people may not necessarily understand, and not in a bad way. It's more so, hey, it's changed. How can is there anything we should do to kind of prepare ourselves on our end? Because I know you said it kind of puts us in a position where now we're more responsible in a sense. What are there any additional things that we can do on our end as consumers?
There's very little positives I see in this bill, right?
Okay. Yeah.
So if people are feeling the same way as me,
Yeah.
I was watching something today. One of the ways that you can feel like you're doing something is go check on people who you know do depend on those government services, right? If it's an
Yeah.
elderly person who lives near you or something, go check on them because maybe their food benefits or maybe their healthcare benefits have been cut out, right? But if you're looking at it, look at it away if you want to benefit from it. I don't know all the specifics in the bill, but I would say you can protect yourself by being on top of your savings, right? Because we don't know how, I don't know if the tariffs are included in this. It may or may not be. But if these tariffs are coming into play, you're going to need some more money on hand because costs may rise in the short term, right? So take this as an opportunity to sit down, look at your finances, see where you might be doing a little too much discretionary spending, where you can start putting money back, start safeguarding and like beefing up those emergency savings accounts, start paying down your debt because we don't know what's going on, right? But if you don't want to depend on the government and you want to take responsibility into your own hands, to be more fiscally responsible for yourself, okay? Because like I said before, it's going to be the onus is going to be on you to make sure you're
I
good.
I think
Yeah.
a lot of people now
Absolutely.
there's a lot of controversial things in this bill, and I will tell you first, I'm not an expert. The
Yeah.
bill is huge. I haven't taken the time to look at
Yeah.
everything, but there's
Yeah.
one thing I think a lot of people it's not really like being really like showing the people this is a big thing right here. It's the amount of debt that we're going to take on because of this bill. Okay, like
Yeah.
we're already
Yeah.
in a deficit, and this bill is estimated by the
Yeah.
CBO, I believe, the consumer. Don't get me wrong on that. CBO, they are the ones, an independent group that
Yeah.
talks about how this affects the deficit, right? And they're saying that this is going to add over
Okay.
$3 trillion to the deficit. Now, these numbers sound crazy, and it's kind of hard to understand this, but think about if you keep putting on debt and you don't have, so let's consider the US like a person, right, let's say a person
Yeah.
puts on debt on a credit card, right? How do you pay off that debt? You have to make money to pay off the debt, right? So you only have a certain amount of hours or certain amount of ways to pay off that debt. You can either work more hours and get more money to pay off the debt, or you make more money, right? But the debt is the debt and you have to pay it. Okay, when it comes to the
Mm.
country, the way they pay off debt is by higher taxes, right? By getting more working people to get into the work environment to pay part of their income in taxes, right? Or they have to do something
Yeah.
else. They have to sell things to pay taxes. That tax money then goes to pay off the deficit. We don't have a big enough population to pay off that deficit. So that bill is going to keep going and going, and then it's going to have someone else is going to have to pay that bill. And it's going to be your children or maybe your children's children. At the end of the day, the United States debt has to be paid. And right now, what they're selling is bonds to other countries. But if you look at it just like a credit card company will look at you, once you get too much debt, you start looking like someone people don't really want to give money to, right? People don't really want to pay. It's
Right.
the
Right.
same thing here. The bigger the debt
Yeah.
gets, other countries gonna be like, I'm not sure if they're able to pay back this debt. Now that changed it that
Yeah.
what happens with a credit card company? They raise your interest rate because they say you're becoming riskier. Well, in the US, when it comes to bonds, you don't have to raise the interest rate to get someone to really say, okay, I'll take this chance on you. But it also lowers your credit rating in terms of being from A, you go down to a B or so. So those things have huge effects that I don't think many people are understanding the consequences. And that debt is what's really scaring me. And that's not a Republican thing, that's not a Democratic thing. That's an American thing. Yeah. It
Yeah.
affects
It's
you, it
money.
affects your taxes, it affects so
Yeah.
many things. It's going to affect your future. So how do you get around that? One, we got to find a way to cut that debt, right? Two, try to find ways to
Right.
lower your taxes, right? Buy assets, right? I told you when you buy stock market instruments, the longer you hold it, if you make a gain on it, you get lower tax, right? If you start a business, there's
Mm.
ways to make taxes lower doing that. So you have to find a way to be more accountable and keep more of your
Yeah.
money and learn how to grow it. That's the thing I think you can do. And again, like Nadia
Yeah.
said, no one's coming to save you. And the
Yeah.
earlier you realize that, the better.
That's right. Absolutely. Absolutely. Well, listen, I know we're getting short on time, ladies. And let's but no, it's just like you said, no one is coming to save you. And speaking of saving, there are you guys did recently some a video on some information I think the audience would need to know. And I know we're short on time, but if we could do it as I won't say as quick as possible, but of course I know you guys going to explain it. But there were some money accounts that you talked about that people will regret they will regret knowing about, okay? They will regret ignoring
Mhm.
in 10 years. What are those money accounts that you feel that most people will regret and that most people will regret in 10
Okay,
years
so
if they
if we're
don't
gonna
know
go
about
quick, I'm
these?
gonna go with the probably the biggest one that they should know about that they might regret. It's the health savings
Let's
account
do it.
with the short term HSA. Okay,
Mm,
this is different from an FSA, which a lot of people have. A health savings account is a savings account
mm,
for healthcare. But what's great about this account is that it could turn
mm,
into a retirement account later on. So I'll explain it to you. One, this account is a tax advantage account and it's tax deferred. This means that you put money in the account before your paycheck gets taxed. That's one thing that's good. So that lowers the income that you have, which can on the other end lower your taxes, right? Potentially. Two, it's used
mm,
for health needs, medical needs, right? So you can pull the money out of this account for medical needs and not pay any taxes on it. Okay. Three, this account, because it's a savings account, it actually can be put into a special account that you can invest in, right? And when you invest it, that money in that account grows tax free. Okay. And anytime you take the money out
mm.
for a medical expense, you are not being taxed on it. You can take it out tax free. Now, why I say it's a retirement account as well,
Wow.
say you invest that money and you don't use it until you're age 65. You can then take that money out of account
Right.
at 65 for anything you need it for. You will be taxed on it, but it wouldn't be, it depends on your tax rate at the time. But that's another type of account you can use for healthcare, because as we get older, more likely our money's going to go towards healthcare. But also, you can use it for anything you want after the
Yeah.
age of 65. So, a health savings account is not a use it or lose it
Yeah.
type of account. You can put money in it every year. The money keeps growing. You can invest it, and it's tax advantage, triple tax advantage.
That's amazing. Okay. So a
HSA. It's only available if you
HSA health
have a
savings
high
account. Okay.
deductible medical plan, okay? And if you have an FSA account, you cannot have
Mm,
both at the same time. So you have to get rid of one to take the other. It's not for everyone, but if you can look into the details and see if it's beneficial for you, say you're not going to the doctor all the time, you don't have kids all the time going to the doctor, that makes it
mhm.
more of a type of account you might want to look at for retirement purposes.
Got it. Wow. Amazing information. And then what was the other account that you all mentioned as well too?
Another one would be the taxable brokerage account that Nicole was speaking about before. So
Okay.
think about it. Well, as I'm talking to you, I'll give you two
Yeah.
more.
Sure.
Everybody should be enrolled in their jobs retirement accounts because you're leaving money on the table if you do not, especially if your employer gives you a contribution also, right?
Mm,
But outside of the retirement accounts, you want to look at a taxable brokerage account because you have more ability to dictate where your money is going, what you're investing in, and you have more options that you can invest in. And I hate using the word options when it comes to
yeah.
that. You
Choices.
have more choices where it
Yeah.
comes to where you want to invest your money. So you can invest in stocks, bonds, you can invest in real estate, you can invest in a whole bunch of different things.
Mm,
And like I said, this is not an account that's tax deferred, right? So you're using money that you got your paycheck, you have some money left over, you invest it in that taxable brokerage account, but allows your money to grow depending on what you invest in. And then you can use that money when you sell for anything you want. So there's no requirements on it or restrictions like it would be for the retirement accounts. You don't have to wait till you're over 59 and a half. You can take it out anytime you want. And this is something you can also open for children in the form of custodial taxable brokerage account. Okay. So that's something that people should use because this is another way to grow your wealth on top
mm,
And
of
then
having
another
your
account
job's
would say is a
retirement
high yield
accounts.
savings account. If you don't want to do the Fidelity cash management and you know that your bank is really putting it to you in terms of fees and also not giving you a high interest rate, look into a high yield savings account. It's usually going to be a digital bank, maybe Capital One, Ally Bank. But look at high yield savings account. It's just a bank account that's going to be giving you a higher than national average when it comes to an interest rate. And it's just the same as a savings account like you would at a bank, a regular brick and mortar bank.
wow. Listen, this was amazing. This was amazing because I'm sure that there are people watching this right now and they're saying, you know what? there are so many of these accounts I had no idea existed, or I didn't think that I should, they probably didn't know about them in general, or know that much about them before you all did this particular interview. Okay. Well, listen, I know we got to run, but before we get out of here, is there any advice that you all want to give to the viewers based on the information that they saw today?
My advice is stop being scared of your finances. Okay.
There you go.
It's a lot scarier if you don't look at it. So the
Mm,
earlier you look at them, the earlier you can take control of them, and the earlier you can set a plan to increase them, right? But leaving them and looking in the dark doesn't help anybody, especially not you. And it's not going to make the boogeyman go away if you're not paying your bills, okay?
that's
So
right.
face them heads on. So that's what I would say to people. And if you need education, educate yourself. You have channels like Calvin's channel, you have channels like ours that are there to help you guys learn how to manage your money.
That's right. Awesome. Awesome. Well, thank you, ladies. I greatly appreciate you all stopping by the channel and such. And listen, I greatly appreciate everything, really, because, I know a lot of people, they have been going through this process. They're trying to figure out where their money's going to be. They're prepping for retirement, things of that sort. So, listen, if you all want to see the Wealth Twins in the future, let us know inside the comment section. Let us know if you want us to bring them back. Put in the comments, bring them back. Okay. Thanks again, Nadia and Nicole. We greatly appreciate you all for being here again today, and we will see
All
you
right.
guys
Thanks,
hopefully again
Calvin.
in the future.
Thank you. Thank you for having us.
Thanks for watching, and we'll see you guys on the next video.